Right, there we go. You can see me. I'm a live human being. Good evening and welcome everyone. Thank you. My name is Adam Harris. Thank you very much for joining me. And we're going to be doing this live webinar. And the topic today is, does the AI revolution still have room to run? So the first thing I want to do is a sound check. I want to make sure that you can hear me, ideally see me. I've got green lights across the board, so everything looks good on my side. I want to make sure that there are, what was I going to say to you? That, yeah, as I said, you can hear me, you can see me. I would love for this to be as interactive as possible. So please feel free to ask any questions as we go through. Again, don't feel that you have to hold the questions until the end. So here's a risk disclaimer. I need to give you an opportunity to digest this, and while you're doing that, I'll give you some background behind myself. So I am a day trader and a swing trader. I'm usually trading the markets when the UK and Asia sessions overlap first thing in the morning, then again for about another 90 minutes when the US session comes online, and then usually at the end of the day, I'm looking at the daily charts to see if there's any setups that I've possibly missed throughout the day. I also manage my own stocks portfolio, so I'm an avid investor and a big fan of investing. I believe it is a learnable skill, and I think that everybody should learn to engage in the markets in that way. I'm speaking to you tonight from Herne Bay, which is the almost the southeasternmost tip of the United Kingdom, just across the way from France. So that is near the cliffs of Dover as well. And I will be your speaker for this session. So on the agenda, we're going to talk about the AI stocks that are demonstrating the strongest momentum and how far they could run if the optimism continues. Then we're going to talk about the best divergence indicators to determine when higher prices conflict with decelerating momentum. Finally, we're going to also talk about advanced strategies to capitalize on potential rallies while still managing risk. How to size positions depending on individual stocks volatility relative to the S&P 500. We'll see if we get to that one. It's usually a relatively complicated process, at least within a short time frame. It's not complicated in general, just within a short time frame to cover that, and we'll see how we do for time. The next thing that I want to do here is I want to cover the difference between trading and investing. So the real reason I want to talk about the difference between trading and investing is because most people are not necessarily clear on how these two activities are conceptually so different that if we don't understand the difference between them, we actually endanger the activity we're doing. So for example, one joke analogy or light analogy that I use is it's the difference between, say, for example, soccer or football and rugby. From a distance, both of them appear very similar. You've got a ball and a field with a similar number of players on either side and similar looking goals. And so the objective also can be very similar, but the reality is that you cannot play soccer in a rugby match and you can't play rugby in a football match. Okay, so you can't really do that. So what I'm going to do here is I want to clarify this, because when we go to the charts and we talk about strategy, we need to know which one we're doing. So it is important to do that. So imagine for the moment that we're looking at the S&P 500 or a similar ETF. So the SPY, for example, we look at a daily chart. So we see the chart going up in an uptrend, and then it goes into a downtrend, and then it goes into an uptrend, and then it goes into a downtrend, and then into an uptrend, and then into a downtrend, and then it works its way up. So here's the idea that price on a long enough period of time goes up. So next, we're going to talk about investing. So we're going to talk about investing. So here's the thing. If you're an investor, and this is a generalization, but it is generally true, usually investing is when we have spare cash. This is money that we don't need to pay for our bills right now. We can afford to put it away. We don't want to put it into a high interest bank account, but we want to put it somewhere safe where it has a very good chance of increasing in value. Okay, better than a savings account in the bank. So property and stocks are historically the most reliable, consistent, safest ways to do that. So what we often do is we tend to find a particular market we're looking at putting our money into. And at this point, which is where it gets interesting, we're not too concerned about the exact price that we get in. Our logic normally goes, the sooner I put this money in the market, the sooner it can begin to work for me. And then we tell ourselves, well, I'm thinking long term. So that's kind of how we rationalize our behavior. So we don't really worry about our specific price. Now, I'm going to do a little bit of a sidebar here, talk about Warren Buffett. So Warren Buffett or Charlie Munger, they would be worried, none of that would really be an issue, except the fact that yes, to them, price would matter. They would rather wait until the right time and make sure that they get in at the right price. But for the most people, we're not concerned about that. We just want to put it in the market and get it to work for us. And once it's in there, so our entry price is not really a concern. Once it's in there, we have to write out the good times and the bad times and the good times and the bad times and the good times and the bad times. And the idea is that on a long enough timeline, it's going to increase in value. Now that's important because it actually eliminates certain markets that we might, or asset classes that we might have considered investing in. For example, it does eliminate, for the most part, commodities. Commodities can be seasonal. Gold can go up and down. There's no guarantee that gold will go up in the next 5 years. It isn't, despite what many people think. Crude oil could go down for the next 4 years. It could slowly be tapering off over the next 20 years as we switch to more renewable sources of energy. So again, it eliminates certain asset classes. Currencies don't even feature in this. It does kind of narrow it down to stocks and property because we know that over time, those tend to increase in value. So we need it to go up. That means it is limited exclusively to asset classes that have a tendency to go up in value. The next thing that happens is often, as long as we don't need that money, we'll just leave it. We often won't exit that position, close it out. We won't take the money out. We might even add to that exposure or to that investment. The point is that we don't necessarily have an exit plan. Now, of course, some people will have a specific entry price. Some people will have a specific exit plan. But for most people, this is kind of how the story goes. So let's talk about trading. So trading is when we have to earn an income every single month. And trading becomes either a primary or secondary source of income. And we have to get paid every month. It's not dividends. It's not the same thing. We need to get a paycheck every month. We've got to pay our bills, pay for our car, or pay off our debts, pay our credit card, all these different things. We have to. Responsibilities. So trading is when we are, if we want to make an income at the end of every month, we need to be closing out positions in order to get the profit to pay the bills. So that's immediately a vast conceptual difference between the two. We have to close out positions in order to bank the money, to withdraw the money to pay our bills. So we are going to be closing out positions in trading. So that leads me to one of the first major differences with trading. We are always closing out our positions at some point, usually within a month, so that we can get the money at the end of the month. So often what happens is we tend to kind of psychologically break it down into weeks. So I'm ideally looking for money-making opportunities every week so that by the end of the month, my positions have closed out. So those positions might last anywhere from a few hours to a few days, maybe to a few weeks, but not longer than that. So trading is shorter term. Objective is to make money on a move and close out that position and then look for a new opportunity. So you're always going to be looking for continual new opportunities and closing out old ones. And if this kind of rubs you the wrong way, it's important to acknowledge that, to recognize that we need to make sure that you're leaning long term. Then that means maybe investing is more attractive for you if it goes against the grain. But as a trader, you absolutely will never enter a position in the markets without having an exit plan in place. Okay. And if we're trading, our entry is very specific. So here we've got an uptrend. We've seen a nice little bullish candle with a nice little bullish tail. We've got a pullback and uptrend where our entry is exactly 1 pip above the high of that candle and our stop loss exactly 1 pip below the low. So we have a very precise entry to a point precisely. And we're targeting, for example, 3 to 1. So we're targeting 3 to 1, 3R on a trend-based with trend strategy. And that is our trade. We only need that market to maintain its momentum until we hit our 3 to 1. Then the trend changes and then we see a little bit of a downtrend. We have a bit of a bearish setup over here. This is meant to be a candlestick. Entry 1 pip below the low, stop loss 1 pip above the high, and we're targeting 3 to 1. Okay, so we're looking for very high probability, immediate next move of the market. Ideally, we want, for the most part, we want the existing momentum to continue. There are reversal strategies as well, but I'm just using an example here. This is the go-to bread and butter earning strategy for most profitable winning traders around the world, everywhere. So it's very different. So we have a precise entry and we will close out those trades, unlike an investment. And if we have another setup, we'll take another setup. But the goal is to always close out, because you don't get paid unless you close out the trade. So you've got to work backwards from that fact, that irreversible, unavoidable, irrefutable fact. And so it's a much more shorter term period. Okay. All right. I think that sort of covers the major differences here. The next thing that we're going to do is quickly talk about the fact that there are really only two types of market conditions. There's either no trend, which is ranging, where the market doesn't really know where it wants to go and it doesn't do anything. Or we have a moving market, which is either trending up or trending down, or I should just say moving up or moving down. So we have two types of market conditions. Doesn't matter what you look at. That market is either moving up, moving down, or it's not moving at all. And so our goal is to identify what is its current state. If it's not moving and I don't trade those types of markets, I move on. If my strategy means that I have to find and identify and engage with only trending markets, I go look for those. Excuse me. So the next thing is that there's really only three ways to engage in the financial markets. Yes, we can identify a range, which is really the market's not going anywhere. So nobody's in control. So it doesn't matter whether you buy or sell, the market can change trend or change direction at any point for no reason, because there's really fewer people engaging in the market. It's not going anywhere. For all intents and purposes, it's in a coma. So one way to engage in this, which is a legitimate way of doing it, is to buy at the bottom, trade it up to the top and take out profit just ahead of the top of the range, or sell at the top, trade it down to the bottom and take out profit just above the bottom of the range. That's a legitimate way of doing it. It is the second best way, in my opinion, of earning an income by trading the markets. Then we have another way in which you could do it, which is to trade contrarian to the market, which is to trade against the flow of the market. This is called reversion to the mean. So for example, if there's a Bollinger Band or a moving average and the market is overextended, a trader might look to sell here, risking 1% or 1R and targeting reversion to the mean, which is usually an inverse reward to risk, which will be 0.5R. So it'll be inverse reward to risk. They'll risk 1% to make 0.5%, for example. And the problem with this is it is a very poor approach. This is why it is number 3 or 3rd in our strategies or ways of engaging in the markets. It goes against the flow. It has a high number of losing trades. And because of the inverse reward to risk ratio, when you do win, you don't really make that much. It's not very profitable. It's a terrible way to engage in the markets. I can think of no well-known successful traders who have made money this way. And then we get to the first or number 1 best way to engage in the markets for the average trader, which is to identify a trend, then look for an entry on a pullback or a breakout or a pullback or a breakout or a pullback or breakouts, and go in the direction of the trend. This makes a lot of sense because the reward to risk is usually very good, 3R, 4R, 5R, so on. And also it's safer because the market has a direction, it has a flow, it's going somewhere. It usually will result in far fewer losing trades. All of these will result in losing trades. We have them, we cannot avoid them, but there are a greater degree of profits, reward to risk ratios, plus also win ratios. So win ratios, how often your strategy wins versus how often it loses. And then profit ratios is how much you make when you win versus how much you lose when you lose. I'm hilarious. Okay, so this is the difference. And so if we're going to work with a strategy that we really want to make money with, we want to learn, this is the skill, how to identify what a really good trend looks like, whether it's going up or down. Okay, so let's have a quick, let's take a break and go take a break here and go and have a look at the markets and see what a few of these look like. So let's look at Apple. Make sure we're sitting on the daily for now, so we can just go and have a look at the daily charts and let's see what's going on. So right now, here you can see we had an uptrend in the past, then we went into a little bit of a downtrend. So let me draw over it so that we can appreciate what it was. So here is there's your uptrend going higher and higher and higher, but then you also had a downtrend here, okay, which is, you wouldn't necessarily know this, but that would actually be a bull flag on the weekly. Then we went into an uptrend, then we've gone into a little bit of a downtrend and we're double bottoming and we're kind of doing all kinds of things. So it looks as though we're creating a bit of a head and shoulders. And if we break through here, we're going to come down to about this level here. But right now, there's no real clear trend. You've got a lower high, lower low within that trend. It's a little bit messy. Okay, so if you argue that that's it, you've got a lower high, you don't even actually have a lower low. But if we look at that, and then we look at this, and we look at this, overall what's happening is it is forming a bit of a bearish breakout pattern. So if it breaks out through that, from experience, we are probably going to come back down to here. Okay. You can also see, out of interest, that this is almost doing almost precisely what this is doing. And for the record, excuse me. For the record, when price and the indicator are doing almost the same thing, we call that convergence. So they're in agreement. So if this is trending higher and this is trending higher, or in general trending higher there, so it's actually going up over here, that is convergent. Okay, if it's trending higher here and it's trending higher here, that's convergent. But here's where you get some interesting things happening. For example, here, it trends up producing a high, low, high, high, but here it produces a lower high. So we have what we call divergence. And what that does is, you wouldn't necessarily know this from experience, but that means that if we split things here, it means that after that, when we get that bearish divergence, it means that after that, that bullishness is not necessarily there. So it's faded. Also here, for example, we've got a series of lower highs, but here we have a series of higher lows, and that is bullish divergence. So what happens here, because that's bullish and this is generally bearish, price ultimately continues up and corrects. So it's divergent here, then it's convergent here. It's divergent here and it's convergent here. Here and here it's doing the same thing. So these indicators are incredibly powerful for detecting when a market is losing steam. You can see it in other areas. For example, if I just draw a line here, go down there, and for the purposes of illustration, just draw a line here. So during this period, you can see we're producing a series of higher highs. Okay, higher highs, it's a nice uptrend. But when you look here, you can see it is producing a series of lower highs. So after this long uptrend, it goes where it is generally trending higher all the way along. Towards the end, the market has become a bit exhausted, and we can see that there's a bit of divergence here. And so that divergence has started to creep in, and it results in, after the line on the right, it results in a change in trend. Okay, the market became exhausted and ultimately had a correction. Now, let's talk about AI. Let's go have a look at these companies. I wanted you to just see a few companies to see how some of them are doing. So if we look at Alphabet, for example, we could see, and I think it's potentially better for us to look at it from a weekly perspective. Weekly perspective gives us a nice little opportunity to zoom out and get a sense of what's going on. Here you can see some very nice bullish ones. So The first one on my list is going to be NVIDIA. Most of you know about NVIDIA's stellar performance. It's looking incredible. It's a little bit overextended. You can see how often we head away from the moving averages before we come back. And definitely it is far enough away from the moving averages, I would say, that if at this point it did produce a red candle and start to come back down towards the moving averages, that would be acceptable to me as a potential retracement. That would actually make sense to me. Excuse me, similar to what we've seen over here. Over here, eventually, it has a good run. Even over here, where it eventually has a really good run, it went up a bit sideways and then ultimately came down. We're due very much for a bit of a correction here. And the first clue will be a few red candles. We'll need to see a few red weekly candles. That'll be the first clue that the buyers have run out of steam. One red candle, not necessary, but another one, 2 or 3 red candles would indicate enough. And then it would become self-fulfilling. Then a few people or technical traders would start exiting in positions. A few bears would start shorting it because they're looking to do short-term trades to the downside. So that is one of the things we're looking at here. It's been faring very, very well. At this point in time, I should say that from my personal experience, I was one of the early adopters of ChatGPT by pure fluke. My girlfriend came home from work one day and said, you should have a look. Some guys at work are talking about this thing called ChatGPT. And this was early last year when it hadn't even reached mass, the zeitgeist. Most people didn't know about it, which was absolutely amazing. So immediately an early adopter, loved it. And I signed up for Google Bard and I signed up for all the different ones. So basically I started to test all of the beta versions of everything, and it's been great. And here's the thing. The reason we know that AI is in its absolute infancy, to answer one of the big questions that was presented on our agenda, how do we know if it's in its infancy or if it's now maturing? The reason we know that it's still in its infancy is because, for example, that the Microsoft Copilot still can't do certain basic things that ChatGPT can. ChatGPT can still make mistakes with maths, so that stuff, basic maths, sometimes still hasn't been ruled out. There was even, who was the other one I was looking at? There was even, so there was the Google Bard as well, certain things where, and certain images, people have extra fingers, extra hands. Those types of things have to be fixed before you could really say we have a workable, reliable AI. So that's really important. So for basic maths to get fixed, for images to produce, not producing animals with extra legs and so on, it's certainly looking good, but it isn't there yet. And when it produces, for the most part, without making those types of errors, then you could say we've now reached a workable level. Okay, so that's the first reason that we know that they haven't reached it. The second reason we know that is because AI has yet to be integrated into everything. What should happen is AI should replace Siri or Alexa completely, so that you can have full-on back and forth conversations with it, which it hasn't replaced that yet. It hasn't got there yet. And that's literally when you know, okay, we now approve it, it's now integrated into our cars, it's integrated into our phones, it's replaced it. But the very fact that they haven't replaced Siri or Alexa yet means that it hasn't got there yet. And actually, on paper, it is better. It is better than Siri or Alexa, but they haven't integrated it yet. So they still have to do that in the next phase. So there's lots of areas where AI is proving to be amazing, but there's lots of basic places where it just hasn't been integrated yet. And that is really proof that it hasn't reached or hasn't been. When we get to a place, when we get to a point where AI is built into our everyday lifestyle in the way that our phones are, that wherever we go. So for example, you might have an Alexa that is on your phone and in your car and in your house. And the conversation you have on your phone is the same person or the same AI entity in your car and in your house. So that when you say, oh, you know what, remind me on my way home to pick this stuff up, and you say it into your phone, it will come through in your car, in the car. And when you get home, it'll say, welcome home. And it's the same character or the same person or same thing you're talking to. They have the same conversation access, which is not the case right now. And that's when you could argue that AI has really started to integrate itself into the real world. And it's not there yet. They're still talking about a lot of the stuff in beta. They're still doing that. Okay, and we haven't created. So that, long story short, it is amazing, and the leaps and bounds, no doubt, will change it. But we don't have AI integrated into space travel yet. We don't have it integrated into medicine just yet, but it's definitely going to be there. So if anything, it is transformative, but it's only just touching the surface. So another way to do it is to say, yes, we've seen the most incredible things, and that implies that it has so much potential. But the very fact that it hasn't been integrated into a lot of things just yet shows you how much further it still has to go. So, so there we go. So just to show you this, yes, NVIDIA was an early adopter. They were integrating it. They'd been using AI for a year or two and already, integrating into so many things. And because NVIDIA's engaged in games and so many other different areas, it's been in so many other industries already where it's starting to make a difference. And yes, over time, and this is a fact, every market, no matter how good it is, it doesn't matter if it's Berkshire Hathaway or Coca-Cola or Tesla or anything, will have these extension and retracement, extension and retracement, and we'll have it. Though it's going down as well, extension, retracement, extension, retracement. Right now, NVIDIA, and you can see it's done it here, extension, retracement, extension, retracement, extension, retracement. It has it. It hasn't done a retracement in quite a while. It has to do it. No market ever in the history of man has ever not had that. Lots of people take profit. So this is something that we can expect in the near future. But what does this mean? Does this mean that the trend is over? No, it doesn't mean that at all. In order for the trend to be over, we'd have to see a drop down and a lower high and another lower low, and we'd have to break all these lows, and we'd have to close under the 50-period moving average. Only when all of those things have happened, then we have a change in trend. Right now, trend is nice and strong. We need a retracement before we can recover. The deeper the retracement, counterintuitively, the deeper the retracement, the deeper the correction down into this area, or potentially down to here, or extremely down to there, but I think it's more likely to come down into this area, the better it is for NVIDIA's future growth. Because just the better it is. A shallow retracement, yes, says it's nice and bullish, but a bigger retracement allows more people to take profits and more people to get back in, and it feels counterintuitive to the people who aren't seasoned investors and traders, but actually the more it cools off now, the better it is for the future. So looks good. Almost certainly going to have a bit of a correction here. Now, next up, Google. So Google Bard, for example, also has updated. They've changed the name now. I think they call it Genesis, something like that. It's okay. It's ChatGPT's way ahead in many other ways, but the potential's there because Google can access Google Images and Google Earth and all these different things. In theory, there's no reason why it shouldn't necessarily be one of the best. I'm actually disappointed now that I say that. I would have expected Google to produce the best one out of everyone, but they haven't done that yet. You can see they've currently got an uptrend. And the difference between this and NVIDIA is it's already doing lots of healthy retracements, which means it can continue to climb from where it is now. It's broken up past all-time highs, or just managed to do that. It's battling a little bit with that, all right, with breaking through here. So we need to see if it's going to manage to continue. So what I've been looking for in this area, excuse me, will be a green candle and then a continuation to the upside from here. So that's what I'd be looking for in this area. Overall, Google looks nice and strong. Always a good idea to have a look at it from a monthly perspective. How does it look? It had a really nice retracement here. We've got the 50, 20, and 10 in a bullish formation. We had a pullback. We had a very nice bullish candle here and a bullish continuation. We're tempted to break through there. So really what we're looking at here is essentially a strong level of resistance. Okay, so we're looking, what are you doing? Where is my, okay. Any particular reason why we're not getting the horizontal level that I was looking for? Price line, trend line, no, okay. Very odd that it won't let me just draw that. Weird. Oh, that's why, because the color. So it was there, just couldn't see it. There we go. Nice and easy. So it's battling to get through this area. So we might see that it comes down into this area again. If we produce a nice bullish candle here, then we can see a continuation. But if we once we get that breakout, we'll see it. So it is battling with that level, and I would pay attention to that. That appears to be that sort of 150 level, and we're going to have to see if it can get through that. But otherwise, it looks pretty good. In terms of the AI, it's not, and this is all coming from personal user experience, so this part is subjective. But from what I can tell, it's not outstanding yet. It's not really there. Next up, we have Microsoft. So Microsoft's got Copilot. I love the way the Copilot's integrated. You might be able to see my desktop here. This is Copilot over here. It's integrated. There we go. So you can just preview it. And yes, you can do all kinds of things like this. So let's try it just for the fun of it. Can we do that? Will it show up on my, no, it doesn't show up. So go to webinar, doesn't show Copilot. So I'm going to just get rid of it. That's fine. So we'll just go back to normal and take it from there. Okay, so it was built in to my platform here. Now, again, let's have a look at Microsoft. Microsoft is doing particularly well. It had a beautiful retracement. We've got the 50, the 20, and the 10 in nice bullish formation here. We've got a retracement and a beautiful move to the upside. Also having broken above this high here. Are you going to keep doing this to me? Can we set this as save as my defaults? And so we can have that. You can see we've broken through that high as well. And that looks pretty good, but you can see it's starting to stall a little bit where it is here. So it's also showing the possibility of a little bit of a retracement. Let's go down to that weekly. Really do have something that is hurting me. Almost feels like a popcorn kernel, which is not any of your, shouldn't disturb, shouldn't be your problem, but it is a little bit distracting. And you know what it's like when you have something between your teeth that is hurting. Okay, never mind, I'll hold on to it. So just noticing, please take notice that again, how often we go from green candlesticks, green, 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 then we get red, and then red, a bit of a retracement, and then we go green, green, green. Here's one of where we get a bit of a red and it continues. And then we get to a series of reds before we have a bit of a correction. If I go over here, for example, you can see we go green, 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 then we get a red candle, and then we pull back a bit. Then we get some green candles, then we go off again. And again, we start here, we get a red, and we carry on red candle, but then we get a red, and then we start to pull back again. So what I'm looking for here is, again, that red candle looks as though it's getting ready to pull back. So, excuse me, let's just do this. So, but the other thing I want to show you is that we have a higher high here. We have an uptrend, beautiful, higher lows, higher highs. And here we have it as well. There we have a higher high, and that's it. We've got this very nice uptrend. So what that tells me is that right now, this trend is healthy. Healthy. It tells me that should price pull back into this area and produce a bullish candle, something similar to this, that the most likely thing it's going to do next is carry on. In other words, the current trend is strong and healthy. And the pullback is part of that trend. It's not a different thing, it's part of the trend. In other words, pullbacks in here are included in the trend. It's saying, even if you're going to pull back now, it's normal and it's healthy. If we get a green candle here, it should carry on. On the other hand, should we have gone lower, should this have gone down, then that would imply that the trend is not healthy and we're likely to see a deeper correction to the downside. So trend looks good, nice and healthy, expect it to continue. Really, really weird. Oh, there it is. That's what I'm looking for. Excuse me for 1 second. I got the thing out. There we go. Relief. Okay, so that looks really good. So I'm liking the look of that. Microsoft looks good. It's doing a nice, normal, healthy retracement. When you look at it from a daily, it's going to look a bit more dramatic. Not going to look good, but from a weekly, it's just a normal extension, retracement, breathing out, breathing in. A bit of a wobble here. I think there's a very high probability that we will see Microsoft head down to here and then carry on up. 380, 390, 400, and then carry on up from there. Cool. The next one on our list, and don't forget, they're not just offering these services to the public, but they're using a lot of these. For example, NVIDIA is using it in its processing GPUs, as well as AI applications and AI learning. One of the things that blew my mind, and if you look on YouTube in one of their releases, they spoke about all the different ways in which they're using AI. And one for me was absolutely incredible. They wanted to build a new semiconductor manufacturing or chip manufacturing plant. And they used AI to help them optimize the layout of the plant. So they would say, look, we have all these machines and they need to be in this order because this is the way the pipeline goes, the manufacturing pipeline. And here's your space. And then the AI would then just try different layouts until it got to the one and said, this is the most optimal layout. You've got, you'll be the most productive and the most powerful. If you lay out all the machines in this way, your production pipeline will work that way. That was incredible. To me, that was absolutely amazing. Then we got Google, as I said, Alphabet. They'll be looking to integrate into their projects and their services, which will include things like Google AI, DeepMind, and Waymo. And Waymo I'm not entirely familiar with, but I'll have to become familiar with it. And then we get to Microsoft, obviously, which then uses it in its cloud computing services, which is also known as Azure AI. And they have other AI products and services. So they're still figuring out where else they can use AI. This is what's so amazing about it, is that they're doing that. For example, one of the ways in which it becomes quite good is in your driving, the car will be watching you to see if you're falling asleep or not paying attention or maybe having a heart attack or something like that, and then be able to respond accordingly. I mean, that's amazing. That's incredible stuff. And then we have Amazon. All right, so let's go through and have a look at Amazon. And again, I think it's best for us to look at Amazon firstly from a monthly perspective. Let's get a sense of where Amazon is right now. Beautiful uptrend, pullback, beautiful bullish candle, and a break to the upside. Now, this is where it gets interesting. If this distance, because this can be the case, if that distance is matched, because often that's the case, you can match that distance, that means we're likely to probably have another pullback in this area soon, which also matches this clear level of resistance. So I would say, that it is reasonable to expect Amazon to encounter some resistance where it is now over the next couple of months. April can be bad years. April as a month can be a bad month. September is usually terrible. April can be a funny month. So they often say sell in May and go away. So we'll see if that's going to be the case. If it does just break through, if something happens, that would be a really good sign. But we might have a couple of situations like this where you get these failed breakouts. So I think this is an area we want to be paying attention to where we are right now. If that's going to be the case, we could be seeing some divergence. So let's just put this in here, go to this. Now we're going to go and have a look, and we're going to look and see on the daily if there's divergence, if there's any signs of weakness coming into it as it approaches this key level. So another thing I want you to think about, there are really big institutions, hedge funds, mutual funds, various other funds, as well as investment vehicles who might be looking to take profit. So they will have different timelines. Sometimes some of them are trading the monthly, so they'll be getting in here and getting out here. So they'll be in it on the monthly chart. Some are looking at the weekly and some are looking at the daily. So what that means is that at certain points here, for example, you get the monthly, the daily, and the weekly investors potentially starting to extricate themselves from those positions, which means that it becomes a self-fulfilling prophecy and it gets a bit tired. So let's look on the weekly and see if there's any clues or any signs of exhaustion there. So the first thing we see is we have a trend. We have a trend here, and a pullback, and a continuation, and a potential swing high, which means that there's a good chance we're going to see a bit of a pullback here. Okay, that's fine. When we look here, we can see that it is trending up. So there's a high there and a high there. So there's a high there and a high there, which means this trend right now is nice and healthy. There's no signs of failure with that, which means that it implies that when it comes back down here, it has a good chance of producing a bullish candle here and taking another run at that level. That's interesting to me. It implies that it's probably going to be able to keep going. We'll have to come back in a couple of weeks or a month or two and see how it handles that. But that also looks really good. Then we have Tesla. So Tesla currently is one of the very few in the S&P 500 which has lost value, and not just a lot. I mean, not just a little bit of value, a lot. At its most extreme, 25% of its value. So let's talk about what's kind of going on here. We have a downtrend, lower highs, lower lows. We have a downtrend on the weekly. When we look at it from a monthly perspective, we actually also have a downtrend, lower highs, lower lows. We are at a significant level where there could be a bit of a pushback, but we have a monthly and a weekly and a daily downtrend. This is an area where in the past it has managed to find some support. It could happen. And also it's in a bit of a channel. So if I just draw this, it's a little bit of a channel that goes, whoever did this is very annoying. So it's a bit of a channel that looks like this. Can I duplicate that? Is there a way to do that? No, I have to go and get another one. Bit of channel, let's just go and do this. There we go. Okay, a little bit of a channel within this. It's bounced off the bottom here, which is all. So the truth is that we have conflicting stories here. We have price heading lower, but it has also reached a point here where if price does manage to go back to up to the top of the channel as it's done in the past, at that point it could break out. And once it passes this high, so once it breaks out of here and passes that high, the probabilities that it's going to come up to here are real and on the table. That's a very real possibility. Now, the other side of that is that if it fails to go up here and instead bumps its head here, for example, and breaks down out of the channel, out the bottom, then the probability that it's going to come down to here and lower is on the table. So the reality is that it's stuck between this channel and the downtrend, as well as this often being a potential setup. We often have in trading what's known as a bull flag, which means the price goes up like this, then it does a little bit of a mini trend down, and then it breaks up like that, and that is known as a bull flag. And arguably this could be a bull flag. So price is going up like this, and it breaks up and goes up like that. So we really are sitting at a point where it could go either way. And the reality as well is that whether you love Tesla or hate Tesla, there's actually an equal amount of good news and bad news. Okay, in fact, there might even be more bad news about it. All kinds of things. But also I looked, for example, I hear, there's lots of articles about rust on the new Cybertrucks that have just come out. They're starting to rust and the panels don't line up and panels are different colors, for example. But then the new updated Model 3 comes out and it's amazing. The workmanship, the quality of that is the best out of all the Teslas. So it's almost as though you've got a mixed bag of good news and bad news. But that Model 3, if you have YouTube it, looks amazing, honestly. And the prices have come right down. So there's different kinds of things going on here. And so again, as I said, whether you love or hate Tesla, and actually I think in either case you're right. So if you like Tesla, you want to be an investor in Tesla, go for it. If you don't like it and you don't want to invest in it, I think go for it. You should be happy with your investments either way. Tesla is involved in AI, predominantly pushing their autonomous driving. Now, Musk did try to call them a robotics company. They're not. A company is what you can buy their product for. So if you cannot buy a robot from them right now and you can't do all the stuff now, that's not what they are. So in other words, they are what their services are. It means if in a year's time they're selling robots, then they can call themselves a robotics company. But the fact that they're doing R&D on it now doesn't mean anything, because they might scrap that R&D and it never comes to fruition. So it's really only when you base off the product you get, which is vehicles. Okay, electric cars, that's what they do. And so that is really what their services are. All right, now, and so anyway, the AI, just wanted to show you, supports a lot of that. Very interesting developments there as well. It's like their own little niche thing, and I think that's pretty cool. Now, then we've got IBM. I couldn't remember if I added IBM to this market as well, which is IBM. Let's go have a look at that. And so IBM International Business Machines Corporation has been a pioneer in AI with its Watson platform. You know what? I'm going to go have to look that up. I wasn't aware of that. But I find that fascinating as well. So when you go look at them, and we can get rid of all the objects here. So can we do that? Where's my options over here? Which is delete, hide the studies, remove the studies. I'm in drawings, not studies. What am I missing here, guys? It used to be over here. Am I missing something? There we go. Hide drawings. Gotcha. So what do we know? Well, you can see overall it's trending higher, especially if we look at it from a weekly perspective. Definitely had a big boost over here, a little bit overextended, and we've got a couple of inside candles there. So often this will lead to a bit of a pullback. So similar, again, similar to Microsoft, to Alphabet, they all need a bit of a retracement back down to the moving averages to carry on. They just need this. It's not indicative of their future potential. It's just the breathing out and breathing in of it. It'll just come down, pick up, and then probably carry on up. I want to have a look at the monthly to get a sense of it as well. I want context. I need to know where we are in relation to the all-time highs. You can see that reaction close to it, some profit taking there as well. So likely we'll see a bit of a pullback and then a continuation back up to the all-time highs, but it looks good. No, there's no red flags at this time. Look at the MACD just trending higher. Let's go look at it from the weekly perspective, see how that looks. And that's trending higher. So we don't use oversold and overbought in the city. It's incredibly unreliable. We love divergence and convergence. It's very accurate. Then we got Meta. So I'm going to add this to the watch list. And then we got Meta. Oh, also, by the way, oh, you won't hear it. I was going to say, if you hear dogs barking, that's because my wife has come home and the dogs are just going to go nuts. So Meta have had an absolutely outstanding year. Now they are very much into the metaverse, and that'll also be AI driven. They'll just be the beauty of AI is it can be integrated into everything. And I think in the future there'll be, you'll have potentially one AI that helps you with almost everything. So it'll be like a Jarvis. I love Jarvis from the Marvel movies, and Jarvis would help you, would take notes. You're in the kitchen and you say, oh, Jarvis, and Jarvis is in the fridge, built into the fridge, built into all these different things on your phone, into your speakers in the house, for example, into your TV. They say, Jarvis, don't forget, please remind me, I want to make spaghetti bolognese for dinner tomorrow night. Please make sure that I've got the ingredients, look in the cupboard, check that I've got everything, remind me to do it. Also put it on the shop list. If you can just order it off Amazon, that's absolutely fine. Or just remind me on the way home, I've got to go to the shop tomorrow and do it. And all that stuff will just be integrated. And that's the amazing stuff. So Meta looking just very super strong right now. Are they overextended? Absolutely. If you look, to give you a frame of reference, how do you know when a company is overextended? Well, when you kind of look at this gap and go, well, where else have I seen a gap of that here? To the downside, there was a big gap like that before the market came back to the moving averages. And here it was a little bit and had a bit of a correction. So the fact of the matter is, yes, this is the most overextended I've seen it going back to 2018. We can go and look further back, but it does need to have a bit of a cooling down period. And potentially what that could look like is that price could hover where it is and the moving averages come up to meet it, and then it goes up from there. Meta so far doing almost as well as NVIDIA. And I heard today that NVIDIA overtook a whole lot of other companies in terms of market cap. Literally happened today. So there's incredible stuff there. And they'll use, so Meta will use AI for content moderation, which is very clever, targeted advertising, and developing the metaverse. But yeah, the point is absolutely content moderation. I mean, that's a very good way, because AI can suddenly look out for and do things. Obviously, if you're going to use it in in an evil way, for want of a simplification, yes, you could use it to spread disinformation and misinformation, which would impact elections. As an example, we have the most significant election in our lifetime at this time coming up in November for the US. And there's a lot of stuff riding on it. Russia is hoping that there'll be a certain outcome because Russia is, on the verge of declaring world war, like with NATO. There's crazy stuff happening. So we need to make sure that disinformation is kept under control. And that's a real threat. It's insane. You would never have thought it if you'd said this to someone in the 70s, 80s, or 90s, that misinformation would be everywhere and that people would be, drinking Kool-Aid and thinking all kinds of crazy stuff. Then you've got Baidu. So it's often referred to as the Google of China. Let's just see if we can see it in here. If we've got Baidu, if we can do this one. Did I add Meta? Is Meta on my list? Yeah. Let's try this one. There we go. So Baidu is often referred to as the Google of China. Baidu is a leader in AI research and application in the Chinese market, especially in natural language processing, which is large language models. You learn all that stuff. That's all the stuff that goes to with them. And also then autonomous driving. So Baidu manufacture cars. They are definitely interested. They're a competitor to Tesla as well, similar to Build Your Dreams, BYD, also a big competitor, which has now overtaken Tesla as the world's largest EV manufacturer. So what's interesting about this is that the trend in this is very bearish. You can see it's trending lower, it's losing value, it's coming down to these levels of support. And what does it have? Well, China's market looks a lot like this. So I would say that there's two reasons. Is if it's also in the EV markets, they tend not to perform too well. We can have a look at a few of the others, but China's market is very bearish at the moment. And that would actually explain the overall bearishness here. So I don't think that this is actually great because it shows you the difference between the markets. All the other charts we looked at have great bullish potential. Either already bullish, they might go through a minor correction within a bull market. Even Tesla, which was the worst performing of all the ones we looked at, is potentially in a bull flag and could break out to the upside. Doesn't look that terrible. This one, meantime, looks pretty terrible. And what is the biggest difference? It's catering to the Chinese market, which has shrunk to 60% of the US market. In other words, is going through something. And so that matches that. So I find that incredibly interesting. In fact, this, if anything, confirms, ladies and gentlemen, how bullish the US economy and the US stocks are. They're amazing. They're going through a bit of a golden era now. And again, there's just so much disinformation and so much misinformation everywhere about everything. So misinformation is when you're presented with arguably true information, but it's misleading. Or it's an accident. You give someone the wrong number or the wrong stat by accident, but you didn't mean it. As soon as you know that it's wrong, you would then correct it. So misinformation is unintentional, bad quality information. Disinformation is intentionally misleading, false information, propaganda. The intention of that obviously is to produce a desired result. So an example of propaganda and disinformation as well is talking about how the dollar is weakening. Every currency is weakening. Every currency is weakening. It's unavoidable. It's happening. So of course the dollar is weakening, but so is the pound. So is the renminbi. So is the Mexican peso, the South African rand, the Australian dollar. They're all weakening. Not more than anything else. The dollar index shows that the dollar is actually in no other. It's stronger than it has been for a while, and it's been in the same place since the 70s. So in terms of the bigger picture, it hasn't weakened at all. Okay, then there's talks about BRICS, for example. Other countries are going to come in as an alternative to the US dollar, and that the dollar is going to lose its reserve currency status. So let me just rule that out. There's no way the dollar is going to lose its reserve currency status. First of all, it's the strongest economy in the world right now. Even if you exclude China, which is now only 60% of the size of the US GDP, it's still bigger than the next 8 countries' GDP combined. The next biggest 8 countries' GDP combined. That's a fact. And right now, it's got the strongest economy out of all the economies in the world. So, and the reserve currency status means that whoever does that, whoever takes on the reserve currency, has to take on all the debt, because they have to basically, they've got to cover the debt of any country that uses it. That's one of the jobs you have to do. And who do you think right now is going to take on debt from any other country or take on the US's debt? No one. There's no one that actually can do it. No one wants to do it. Just let the US be the reserve currency for now. No one wants to take over it. Okay, so the US as a reserve currency is not going anywhere, probably not for the next 50 years. Okay, could that change? Yes. I mean, the fastest it could change is probably in 10, 15, 20 years, but it's not going anywhere now. If anything, now it is established. It is super strong. It's the strongest it's been in terms of all those criteria that it's been in 20 years. So not going anywhere. The BRICS, on the other hand, might provide a tier 2 trading opportunity where maybe it's non-US dollar based, where certain currencies can work, but that's like instead of using US dollar, they're using Bitcoin or they're using something else. It might provide choice. But again, that comes with risk. Partners there have shaky finances and dodgy business dealings. You might have someone like Russia, for example, dealing with Brazil, where Brazil's kind of might have attached its currency to the Bitcoin. You know, there could be all kinds of things that becomes unstable. And so there's risks with that, heavy, heavy risks. So just wanted to leave you with that. I think there's some really amazing things going on there. So to sum up, ladies and gentlemen, AI is just blossoming right now. It hasn't even settled. If it was a baby, it would be not even in its, it wouldn't even be 10 years old in terms of age now as a 10-year-old, wouldn't be a teenager. It's in the early toddler stages. There's lots more stuff. It's definitely worthwhile not being intimidated by it. I don't think you can keep up with all of it, but I think you want to be able to just get a broad overview every few months as to what the developments are. Okay, it's impossible to keep up with all the developments everywhere. You need a general overview, and then you want to keep up with maybe more frequent updates in areas that are of more interest to you. Nobody is going to be able to keep up with all of them everywhere. It can't be done. So on that note, ladies and gentlemen, on that note, ladies and gents, I would like to thank you very much for giving me your time. I really enjoyed this. I think there's some good opportunities. We could be entering a golden era for stocks for the next few years. We've had a massive bear market and a correction post-COVID. We've really had a kind of correction that we haven't had since the 2007-2009 global financial crisis. The look of this on the chart has been very good for us in terms of a correction. So we should be leading, we should be working us at the early stages of the next bull market. So it looks fantastic. I want to say thank you very much for attending. If you do have any questions to do with your account or to do with the platform, please don't hesitate to get in touch with the lovely staff, and make sure you've got access to them here on social media. You've got an email contact as well as a phone number. And I do recommend that if you have any questions, you need any help, do get in touch with them. Don't be shy. And on that note, ladies and gentlemen, I want to say thank you very much. And I'm going to let you go. Have a fantastic week.